Hey guys, good afternoon. 4 minutes late. I'm sorry, I'm trying to do better about being on time. Hey Mark, I was preparing for my show with Ambassadors of Quan. It's going to be a banger. It's going to be a banger if I can. I don't know if I can go a whole hour without mentioning Delta, but I'm practicing. I'm practicing. All right. We would look at the market, but I'm just going to assume it's boring because you guys will be talking about it. We only have a few minutes left. Does anyone want to see an earnings trade? We have Google and Tesla, right, today. Let's just look and see. Let's see what's going on real quick. If there's something you'd rather see, put it in the comments real quick, and I will do that one. Let's see. I have all these windows because that's for another video. I'll just do it this way. I've been also shooting another video on the mechanics of the lightning spread. I'm doing a better job explaining it than I did this morning. But all right. So let's just look at Tesla. All right, we'll look at Google because it's up. Let's just see what we can do in Google. All right. Well, first of all, let's switch this put to a call. Let's check the delta or the IV. The IV is 97. If we go out here, IV is still 97. If we go down, the IV is 98. Okay. So it looks like it's pretty flat as far as skew goes. So I'm going to switch it back to a put. And I'll just do this really fast. I'm not going to try to explain it. I'm just going to get you the most buffer and the best deal for the money. Yeah, that'll work. If you're playing at home, it's going to be the 185, 177.5 put spread twice with the single call, a single 20 delta call, wherever that falls, which is going to be legs, which is going to be out at the 202.5 strike. You can move that in or out if you want more yield. Anyway, your yield's 212. Your buffer is your buffer's 3.4%, 3.7%. Yield's 212. Take your wife to dinner somewhere, affordable. Max loss is $1,200. So that's about 20% for 3 days work. You just don't want the darn thing to drop. Also what I was going to show you is you can look at your short put. Short put strike is a 31 delta. So I'm going to talk about delta on this show. 31 delta, you subtract 31 from 100, and that is your chance of success. All right. So what is that? 69 chance of about a 69% chance of success. Somewhere in that range, something like that. You should win about 7 times out of 10. All right. Don't do it if you aren't bullish in Google, though, or if you don't think Google will at least not go down 3.7%. We'll just call this an earnings shot. I'll do Tesla real quick unless there's any comments. Here, this is copy link. Maybe Tesla will have some call skew. We can also look. I did a trade in real life in QuantumScape, and we'll see how that's doing. I haven't checked in a few days. Paste is plain text. All right. So no. Okay. So we don't need to. Let's just go to Tesla. Back to editor. We'll just switch this to Tesla. Tesla wasn't before the bell. No, they're after the bell. Okay. Of course they're after the bell. All right, now let's look at the skew first. There's probably a better way to do this, but I just look at the money IV, which is 120. Then I go out to like the 20 delta. I'm going to mention delta as much as I can in the next few minutes. You want to go out to the 20 delta something and see if the IV is a lot higher. So it's 118 out of the money, and it's 120 at the money. So this one's going to be fine for a risk reversal. It looks like it's pretty flat. The risk reversal, we don't want to buy that out of the money call if the IV is like twice what it is for the in the money. All right, so we'll switch this to a put, and then we're going to grab another put. And then we're going to make this one a buy. Oh, we got to make this one a sell. Do you think they copied me when they did the blocks trade? Same trade. Short a put spread. And then you're long through the out of the money put. You aren't long through stock. Mine's riskier, but mine's also more potentially rewarding. Synthetically, the same deal. You have lots of upside. Anyway, and you don't realize anything bad happening to you unless you go under the put strike. This put strike's 30. The inverse of 30 is 70. It's about a 70% chance of profit. This is where you're getting your income from. $275 on $725 risk. I mean, that's really good. I'm liking the math of this, but we should. It's 120 IV. But yeah, this is a synthetic. This is a synthetic lightning spread. I came up with this trade around the same time Jay came up with the lightning spread, but I didn't copy it off him. I came up with this one first, but I copied this. He did something in Netflix, kind of like this in ULTI, similar. He sold a put spread to buy a call spread, and so I copied it from there. I don't know why he didn't keep doing those. That was the greatest thing ever. But anyway, all right. So what do we have here? So we have $132. That's not enough. I like to make 10 or 20% if possible. Oh, let's do this. Maybe. Okay, the call's a 25 delta. We're going to scoot it out to a 20 delta. There's a 20 delta. All right, so there we have $302. You take your wife to a nice dinner. I mean, whatever. I mean, not a real nice dinner, but $300. You go out, dinner and a movie. You know, go to Chili's, hit a movie, whatever. Outback's always been one of my favorites. I had some friends that were involved in that. Anyway, all right. Perfect. That's a great trade. I'm just going to save it and give it to you in case anyone wants to do that. I should compare the 3-leg to the blocks trade. I can license the 3-leg, David. If you're watching this, I'll license it and let you guys start doing it. I need to patent it. Copy. All right, there it is. Anyway, I hope that's what you wanted. I hope you guys can get something out of those two. I guess let's look in the market, and then I'll probably let you guys get out if you're kind of faster today. Because I have other stuff going on. Well, good to see VIX is down, and even down with the huge gap. It may have had an option expiration. Lots of times VIX will have a big gap the once a month when they have, because when they roll the contracts anyway. But whatever, they may have had it back here on the, what is that, 23rd? Yeah, it's on the 23rd. That's what it was. It's probably it's the contract roll probably. So anyway, all right. Well, VIX is down. We like to see that. And I'll look, ES and NQ are both up. Oh, look at that. I love that. That is wonderful. Look at that. That is wonderful. I like the looks of that. All right, so our next buy the dip would be the old check the previous POC move, or that'd be one of them. There's other ones too, but 63.71. It pretty much checked the previous POC, both previous POCs right here. Well, that was a great buy the dip move, but 63.70 would be one place to get it. Then another place would be 63.50, and if it drops much further than that, it's probably going to start a downtrend. At least in this time frame. All right, well, that's great. So what else do we have to look at? I really don't think I have much else to look at. You guys do well trading today? How'd everybody do? Brad, yeah, thanks for being here, Brad. I appreciate you being here. CAIE is looking good. All right, and that VIX move is what made SVOL jump. Well, yeah. So SVOL, VIX is a different creature. They're because that is an eroding instrument. That actually does have erosion, and it doesn't even have to do with covered calls. It's because of something called contango in futures. But anyway, and so the VIX ETPs and ETNs and whatever are also kind of act crazy around contract roll time. Whenever they call it VIXpiration. There's also a lot of people say the market will change trend around VIXpiration. Now, I hope that doesn't happen you go to the last expiration, then this expiration has been pretty bullish. I hope that doesn't happen this expiration because it looked like it. They also said the same thing about OPEX. I think the expiration is like 2 days after OPEX, which makes sense because OPEX was last Friday, and here we are 3 business days after OPEX, and I think it was yesterday. So yeah, VIX is its own creature. It's based on S&P. It has the same theories and stuff, but but probably did make S-Vol jump. I guess let's go look at that. Let's go look at that really quick. Let's go look at the old buffer report. So one thing about the buffer report, it always works. Now, it doesn't look great. It doesn't work great, but you never hear me saying, I'm changing the algorithm or I forgot to whatever. So where is that darn thing? There it is, index buffer report. But it is just a great way to get a look at the snapshot of what's happened right now. We'll probably always keep the buffer report around. I just need to maybe incorporate it and make it part of the other spreadsheet too, where we can also see the yield and the max factor and the bigger picture. The buffer report's kind of myopic. All right, so yeah, look at that S-Vol. That's wonderful. That is wonderful. Yeah, that's why the vols are down, because of that big gap down yesterday. That's right. And VIX is getting crushed, and those guys are shorting it, and so that's great. That is just wonderful. What else? Look at GPTY. I really like that fund. I hate to cut it back from 25 to 15, but I mean, I've made really good money. In that one and in ULTY. And yeah, it might keep going up. I'm not going to take it all off the table, but this might be a good time to take some of it off the table. Then we get a little pullback into August. August is kind of weak. August and September can be weak. Get a pullback sometime there, and then I'll probably maybe, bump it back up at a lower price. Because if we do get a pullback, my YQQQ will have a profit in it, and it'll grow from 15% to 20% of my allocation. Then I'll rebalance it, take some YQQQ off the table. That's something that I'm not telling you, you guys aren't factoring in. That YQQQ, yeah, it's a drag on the portfolio, but I put it on when the market was high. The market dropped a bit, and I had a big profit in it, and I went from 28% to 15%. So I took a bunch off the table. Yeah, now I have a loss in it, but I have a loss at a smaller number. But I'm trying to also, use the trending elements to tell me. Anyway, all right. Well, LFGY, unfortunately, is down. All right, well, let's look at LFGY versus blocks. I've been talking about blocks all day. Let's see, 1.33. Let's see here. Let's just do it like this. For some reason, blocks isn't on that report yet. Blocks. I'm just trying to see if it's down more than 1.33, and I don't have any idea if it is or not. It should probably be about the same. Oh, it's down less. Great job, blocks. It's only down 38 basis points. This thing's a monster. Remember, LFGY and blocks don't have the same stocks either, so it's not just the where they're selling the options. It also is how the underlying portfolio does. If David Nicholas is doing a better job picking stocks than Jay's team is, I believe Jay's team runs the strategies on both of them, but David and his investment team, if you watch the great interview from Brad that I saw the other day and a good one from Jonathan, I think David was talking about they have an investment committee, and they meet and they try to put the cream of the crop stocks in here. So they just aren't generating alpha only from the put spreads. They're also generating alpha. You also have to look at the stocks. But anyway, these guys are doing a great job. All right. Well, so blocks is beating LFGY today pretty soundly. Anything else you guys want to talk about? Okay. So here, I want to talk about stuff. I want to mention Delta about 48 more times in the next 5 minutes. And I never thought about that until just now, that the 3-leg is kind of synthetically a block spread, because that's all I'm trying to create with the 3-leg is unlimited upside. And it doesn't really give you unlimited. It gives you half unlimited. But anyway, I'm trying to create unlimited upside, but pay for it. You pay for it with the put spread, so you get a yield, but you don't sacrifice your upside. It's also the same strategy, it's a similar strategy as the GOAT. I keep the strike secret on that one, but it's the same theory. And it was SB kind of figured it out on his own, and I said, yeah, that's the GOAT. But it's just making sure that you have extra upside or that you aren't capped. That's all it is. Yeah, you must never sleep. I saw you last night. I didn't have a late night show last night, but 2 nights ago, I had a late night show and I was on till 11 my time. But then, yeah, and then yesterday morning I got up and there you were. Yeah, you must never sleep. All right, so let's go see. Let me go kind of try to describe this better, or let me see if this is even true. I just now had this thought that no, not that one, not that one. Okay. Well, some of these other ones that I was using for the other video, we can show again there. There's a lightning spread in Google. Okay. And there's the lightning spread, which is in white, overlaid with just owning Google stock. And you guys saw this demonstration this morning. Okay, so now I'm going to duplicate this one and I'm going to do a 3-leg in Google and see how close it is. Three leg is also a trade for a smaller account. You don't have to own the Google, but anyway, let's just look at this really quick and see if what I said is even true. Plus, like I said, I want to mention Delta about 48 more times. All right, so we're going to use the 30 and the 20 Delta. I've looked at their exact positions. They sometimes use the 40. I mean, it depends. Once again, it's not a formula so much. It depends on how well David does at picking the stocks, David Nicholas and the investment committee, and also how well Jay and them do at managing the trades. At placing the puts far enough out of the money, but not too far. So it's a whole big thing here. Okay, but anyway, let me do that, and then as soon as this stops, I will. Yeah, maybe I should make a poll. I know. I really think that thing's going to get to 1 billion blocks because I mean, it mitigates a big problem of covered calls. It doesn't totally mitigate it, but it partially mitigates a big problem of covered calls. If you could totally mitigate the problems of covered calls but still earn a yield, that would be free money, and of course that doesn't exist. Let's see, link legs, no link legs. Okay, so when I'm saying it's synthetically, it's a similar risk and reward. I like the 3-leg better. I don't know why fund doesn't come out and just doesn't do 3 legs on everything, risk reversals. And I'll show you why. I'll show you why. I'm going to duplicate this tab and then compare it with stock. But the 3-leg doesn't have stock, but still you compare everything with stock because that's what people mean when that's how you judge performance. That's your benchmark. So we're going to add stock. We could see what it would do. I mean, I guess you could do stock and a 3-leg at the same time, and you make a lightning spread type thing. But anyway, that's not the goal though. I just want to compare stock itself to the 3-leg risk reversal. Okay, 3-leg risk reversal is the white. So you never have more loss. You never lose more than stock with the 3-leg risk reversal, and that's what I really like. But I mean, you can do it with the small accounts. Your max risk is capped on the. I think what people miss on the lightning spread is, yeah, you're doing put spreads. So you don't have unlimited downside, but you have stock at the same time. Stock has unlimited downside. Stock drops 50%, you're down 50%. That's just the way it works. All right. So yeah, the white. So what you're rooting for when you're doing the 3-leg is just not to drop too far. It could drop 2.8% and you still make money, and you're always making more than stock on the way down. Always. There's never an occasion where you lose more than stock. I mean, and the problem with the 3-leg, and the problem with any type of covered call strategy, and this is a covered call strategy, that it is hard. It's a risk reversal, but a risk reversal, short puts. Well, it's not a covered call strategy. But it synthetically is because you're selling puts. So anyway, but the problem with this is you have less upside, but you can see you don't have capped upside. You can still appreciate, but you appreciate. You have a flat spot where you don't appreciate at all. But then once you do get over 7%, you do appreciate, but that's what you're leaving on the table with the 3-leg. But you don't have to buy stock. You can do this. It's $19,000. Or no, it's $1,600 if you do that. Whereas to do the lightning spread is $18,000. So, I mean, the risk reward's definitely better on the lightning spread because you don't have a flat spot. There's no doubt that I'm not saying the 3-leg is as good as the lightning spread. It's the same general thing. You're going to sell puts and you're going to still hope for the market to go up. All right. That's enough for that kind of stuff. Yeah, you do never sleep. All right, guys, what do you guys want to talk about? Is there anything? I mean, we could, I'm just trying to think. There's always something I wanted to show you after we leave. Free code editors, no. Tasty trade. I was back up again today, which is good. Back up over I just keep crossing back and forth over the high water mark. I was back testing a lightning spread there. Okay. Well, that's not what I want to show you though. Charts look good. Let's look at how that QuantumScape, because I haven't even checked myself. I'm just going to let it go to expiration and QS. That's down $14. Well, I'm rooting for higher prices. I like I have a lot more potential reward than risk. I like the trade, and that's because of the call skew. But so far, the stock hasn't cooperated with me at all. And I did this one also. That one's up $22. I mean, I just hope this thing doesn't drop. I mean, it's only $35, but it's only $165 risk. Anyway, all right, those are my trades. Not very exciting. That the Google trade didn't look particularly good, but the Tesla trade, just the math of it looked pretty good. All right, so I want to give you guys a link right now. This is Ambassador of Quan. This is if you don't have an X account, that's fine. You don't have to listen. I will try to record it and we broadcast it later. I could maybe do that, but not going to be simulcast. This guy says Tesla earnings will be trash. What will the stock's price do? Anyone's best guess. So let me look at my messages. So Jonathan was just confirming. I just texted to confirm it's 4:30 Central. I just don't want to screw up anything. So I'm going to darn sure be there with bells on, Jonathan. But I was just trying to get this link. I don't know how to share the link with you. Maybe, no, not report this space. Share. Copy. I need to get my X skills up to snuff. We used to call it Xing. You guys call it rolling in your generation, but every time I say I'm on X or something, it brings back thoughts of the late 80s. But nowadays you wouldn't even say that. You'd say I'm rolling, right? All right. We have any dice players in here? Someday we can talk about dice hedge systems. I saw something last night that blew me away. It was this. Okay, I got this from the internet, so you have to take it with a grain of salt. And I saw something. I was like, oh, there's no way that's right. There's no freaking way that's right. And so I had to Google it. It is this ICOI. This thing is just now old enough to go in my max factor. So it just turned 3 months old the other day, right? Okay, it says $11. Has it really paid $11? I had to go look it up. It has. It's paid 2 dividends of like $5 and $6. Let's look at ICOI. Now, this is based on Coinbase. And we'll compare it against Coney. Well, that's off the April lows. Sorry about that. I didn't mean to do that. That's off the April lows. But still, though, $11. I mean, the dividend's amazing me on this. It's paid $11 on something that only cost 43 when you bought it. The yield on cost is just phenomenal. But because you have 43 in it, you've got 11 back in 2 months. That's 25 freaking %. I mean, holy cow. Holy cow. And people say these things don't get upside. They used to. They don't anymore because I beat it into their head. But they do get upside. Not as much as the underlying, but they absolutely do get some upside, depending on how they do it. Anyway, so Coney, on the other hand, is paid $1.92 on a $6 initial investment, $6.50. That's not bad either. I mean, that's not bad either. But I mean, my gosh, I mean, NAV went from 43 to 61. Was that 21 points on 43? That's 50%. This one went from 650 to 10. So is that 350 on? That's 50%. I mean, these guys are beasts. But this COIW should be illegal. I mean, I don't know what those guys are doing, but I mean, let's compare COIW to ICOI. Now, ICOI's dividend is so big, I would definitely expect ICOI to do better on the downside, but COIW is an upside monster. It just a monster. Look at this, went from 23 to 60. I mean, that, and then it paid $8 on 23. So that's 33%. And that's in a third of a year. That's 100%. It's paid at this rate, it's paying 100%. And it's getting all this upside. So ICOI is giving you more of your money back in the form of yield, because they're giving you 50% in a third of a year. So 100, so it's more of a yielding investment. ICOI is more about yield, less about upside. And you can see it's just for this one, 43 to 60, that's still good, but it's not as good as 23 to 60, right? So if you want to know how it's going to do on the downside, just reverse it. COIW is going to get spanked on the downside, especially compared to like some of the more conservative ones. Let's compare Coney to COIW. I mean, now Coney is kind of a mix between, they give you a lot of money in yield and a lot of money in upside, but not as much as this one does. Okay, let's look at COIW against Coney. Or against Coinbase, I'm sorry. I mean, I don't even know what to say about that. I mean, Coinbase still gave you more NAV return. You still got it because 150 to 404 is higher on NAV return. But you just got so darn much of your money back in the form of this, in the form of yield also. What did we say that was? 33%? It's going to come out to 100% yield at this rate. 100% yield, and it didn't get as much upside. It got more total return. There's a difference between total return and NAV upside. You look at the NAV upside, and you run the numbers on these, it's going to be more on Coinbase. And of course, because there's no such thing as free money. Of course it is. But I mean, COIW is getting about as close as you can get to free money without breaking all the rules. Okay, so here's something on blocks. Bank Shop Bo just handed it to me. The order cutoff time, you have to have your trades in by 2 to be included on that day. Well, David, if David wants to come on the show and talk about that, I'd love to have him on the show. Good information, Bank Shop Bo. Good information, Bank Shop Bo. All right, can we look at earnings? I mean, is anything moving yet? Maybe. And I'm going to get out of here in just a second. I have to go prepare, but I really do enjoy talking to you guys. These live streams are not good for the bottom line, and you've heard me gripe about it a million times. But It's not you guys' fault that I'm too lazy to record a show and do it the normal way. And I mean, and the thing is, I really get a lot out of our interaction together, and I hope you guys do as well. It's not only about dollars and cents, it's also about, you know, talking about the stuff that we need to talk about. And so I think it's intangibly, these live streams offer more benefit, especially for me. I don't know. I'm hoping for you guys too. All right. All right. So here we have Tesla, Google. I mean, I think Tesla's usually later, but let's just click on it and see what it says. What is that? It right there? Earning something? No, that's not it. I don't know. Somebody put in the comments. You guys know if they've announced already. Okay, it looks like Google. This is what I was looking for. What's happening with the chart? Google had a little shock and dropped from 190 to 184, but that's nothing. I mean, 190 to 184 is not going to touch. That spread had about, what, 3.7% downside. So it's about 8 points. So it got close to the edge of the buffer, but then it bounced. Anyway, well, that's good to see. I bet Tesla has an earnings call at 4. And boy, it could be going one way before the earnings call, and then Elon could get on and it could totally go the other way. I mean, because you never know what he's going to say or get in the middle of. But anyway, ServiceNow might have been a good one to look at too. Isn't it really expensive? Yes, it's so expensive though. Chipotle used to be real expensive, but they split it. Now it's wheel price. But man, I'm glad we didn't do anything in that, because that dropped from 52 to 59. 3 points on 50 is about 7% or so. That probably would have exceeded a buffer on a risk reversal. Oh, here's this QuantumScape. Okay, so this one's so small. You saw I need it to go up. I'm looking for like a target of 14 or 15. I mean, it was more of a call skew play, but we'll see. We'll see. That one may be a max loss. What's GME doing? I mean, GME, I don't think it's earnings, and I didn't do it for earnings. I just did it because just to take a shot, try to stay involved. But let's look at a chart of GME. Oh yes, that's why I just figured out. Somebody in Discord gave me, and I'm sorry I haven't had a chance to use it yet, but or I think somebody gave me an ad blocker, and I used to use ad blockers all the time. I used to do a lot of torrenting, and I used to be on Pirate Bay a bunch, and just whatever. I mean, and I loved putting the ad blockers in Chrome where you don't see the ads for boner pills and stuff just on both sides. But after I quit doing so much GTA, or not GTA, downloading stuff, I just I don't use those ad blockers anymore. It is annoying when those ads come up there, but a lot of stuff won't run when you have an ad blocker up there, and then you have to. But I'm sorry, I'm not. I do know that you guys were requesting that, and I'll put one on there. But the other thing is, I use so many different profiles. I have 3 different browser setups, and some for different purposes. So anyway, but thank you for giving that to me. I do need to get an ad blocker on here, make it more pleasant for you guys. But something's going crazy in Discord. What are you? Let's see if it's anything for me. I just keep hearing beeps. It's nothing for me. Yeah, look at BR. I kept saying 2 minutes, then I said 2 minutes again, then 2 minutes again. I just got out of the shower. I got all cleaned up for my interview with Jonathan. And of course, it's on Twitter, so it doesn't matter. But still, though, when it just feels good when you've been up to 4 o'clock in the morning to take a good hot shower. That's why I was a few minutes late. All right. So did I share I forget if I shared this with you guys. Copy link. I would post it, and I think I already have. But if you guys don't do X, I'm not recommending doing X. All right. What are you guys agreeing about? Let's see what you guys are talking about. Check GPZ. Okay. Growth machine. Yeah. I love the lies. Let's talk about the in the market. I love the lies. Let's talk about in the market activity. I don't get that. Um, FI got murdered today. I was down 2.3 ish at the open, then it clawed back. I wish I would have gotten more after the dump. Yes, I hear that. Okay, well, there's that. There's that X. If I didn't post it before, I forgot. I think I didn't post it before. All right, so let's look at what you guys are looking at. GPZ. Oh yeah, you love the lives. It lets us talk about the market. Exactly. The other thing is when I plan something, it's just going to be what I planned. But there's stuff that comes up just kind of on the fly that might be that that can end up taking us somewhere. So yeah, I like the live aspect of it also. I've always played jazz and blues. I'm and I'm a musician, not a great musician, but I love it. And yes, improv's everything. You hear something. I mean, if Mark and I need to play guitar sometime. Mark plays also, but if Mark was playing something, he might start playing some chords. I would hear it, and then I would react, and I might play something on top of it, and then I might play some chords, and he would jump in. I mean, so that's the same way I look at these lives. All right, well, GPZ. I'll get back on track here. I think I've looked at this or heard of this one before. Oh, and one other thing. I should write it down so I don't forget. Will somebody remind me to talk about Synth, SNTH? All right. GPZ. So this is an alt. I love anything that's an alt. Sales options or alternative income. And whenever it says premium income, alternative, those are usually the ones that I'm going to like. Well, let's see. It doesn't pay a yield. At least it hasn't yet, so it probably doesn't. So it's a growth fund. Let's see what it has in it. Oh, yes. This is the alt where they buy the alt managers. They need to put YieldMax in here. If YieldMax is public, they should, in Defiance, I mean, those are big alt managers, but not as big as Blackstone and Brookfield and KKR. KKR has been around forever. Apollo. Whose company is Apollo? Is that Leon Black? Wasn't he one of the guys that was that had some bad stuff come out about him or something? There's one hedge fund guy, and I thought it was the guy from Apollo that gave Epstein $190 million for tax advice. And I think he had to resign from his hedge fund, and he was the founder. And I thought it was this one. I could be totally wrong. I probably just slandered the real Leon Black. Gosh darn it. Allegedly. Brookfield, Carlyle, these guys control the world. I mean, Carlyle Group, those guys are masters of the universe. A lot of them are closely associated in governments. They work for the Bush administration, the Obama administration, but they're also private equity guys. And those guys, I've heard those guys. I've heard that's one of the most prestigious places. All these are prestigious. If you work for KKR or Carlyle or Brookfield, oh my gosh, wouldn't that be wonderful? But anyway, these guys are doing a great job. Basically, they're just owning stock. There's no options, so you just have stock, and that's great. But you still do get alternative. You do get income off options indirectly because you're investing in the equity of these guys that are doing a bunch of options and futures ETFs. So that's a great one. Okay, Synth. I remembered. SNTH. I did a review on this, probably the first one, the first influencer to do it, I'm sure. But synthetic equity. So this, I forget the exact details, but let's go look really quick. It was some type of hedged equity thing. It's these guys are trying to do a GOAT strategy. If I remember, okay, so let's see here. Yeah, look at this. They're long out of the money calls. And they don't pay for it by selling puts like we would do in the risk reversal, but they pay for it by selling bonds. What a great strategy. So they sold bonds, but then they're long bonds. But then at the same time, they bought the 64.25 call that expires next year. So that's a leap. It's an at the money leap, though, but that comprises 13% of their portfolio. Don't tell me these guys aren't going to do well in the bull market. They have all that leverage, a little bit in cash, but then they have laddered longs. Then they have the 7,400 strike, the 7,000 strike. But then to finance those, they're doing spreads. They've sold the 7,600 and the 7,150. What it looks like they have to me is bonds. And then they have a single long. They're long here, and there's no cap on this long, 6/18/25. But then they have some further. Then they've sold a couple of call spreads on top of that. So, yeah, this is a bull market fund for sure. Let's see how many assets under management this had. It was tiny when I reviewed it, 7 million. What's it at now? 51. Yeah, I totally forgot about this one. But this is going to be a banger, and it has been a banger in the bull market. Let's look here and see if it's done better than Alti or COIW, or let's just see. It's in TH, and we'll compare it to ULTY, and we'll do it off the bottom from April. Look at Alti. And people used to say Alti no go up. Alti doesn't go up a lot, but it does go up when the market goes up. Man, that's Alti's a monster. Let's look at Synth compared to, well, it's not going to beat Alti. It's not going to beat a lot of stuff. Let's look at it compared to YMAX. Let's look at YMAX and Alti. That's a pretty good comparison. That is a pretty good comparison. Let's see who did better in the pullback. And I wonder, who do we think did better? I'll tell you, the answer generally should be, other things being equal, but the Alti's puts kind of mess up the equation. Other things being equal, the one that pays the higher dividend ought to do better on the downside. The dividend is the buffer, and it's what slows you on the upside. So I would say Alti, but I know it kind of confuses things because Alti also owns puts, but so it definitely ought to do better on the downside. Oh, that's right. We've looked at this the other day. That's the whole reason I made that video. You would have thought it did better on the downside than YMAX, but it really didn't, measured from March 1st. Let's look at that real fast, but then we'll also measure it from the start of the year. But yeah, this was actually the chart that inspired that video. I was like, why are it got me started on that video anyway. What did I just do? I don't want that. Okay, YMAX and ULTY. Okay, we've already looked at that. Oh, that's what I want to do. Let's go March 1st. But March 1st is a pretty good, if you bought on March 1st and sold on April 8th, you'd be pretty mad. But that it's a pretty good stress test on a portfolio. And Alti actually did a little bit worse, and they have puts, and they also pay a bigger yield. So that I really wouldn't expect that. That kind of surprised me, and not in a good way. Generally, but let's really make sure they indeed did pay more over this time frame. Maybe they didn't. Yeah, they're paid more. They paid 86 on $7. This one paid 80 cents on $14. Yeah, they ought to do a little bit better on the downside. But it's not only the options; it's also the stocks in there. Maybe YMAX's stocks held up a little better than Alti's. I'm sure they did. But let's look at this. It just shows that callers aren't magic. But let's look at from January 1st to the low. I mean, that's right there together. They're running right there together. Let's check out the dividends again because there's a bigger time frame. So this paid $1.97 on a quarter of a year. So that's $8. $8 on something that costs you $9. Pretty dang good. This one is going to pay $8.88. We'll call it $9 on something that costs you $17. Also pretty good, but somewhat less. Yeah, I know you don't mind as long as it doesn't go up, and they solved the not going up problem. I mean, they really have. I mean, and it's going up plenty. I know it, but of course you don't, because you understand that that being mad when a stock goes down, that I don't ever expect to win on everything I do. I'm glad if I win 60% of the time. So yeah, stocks have to go down to go up. They go down because people sold it, then then people buy it, it goes up. It's just kind of the way it works. But yeah, I hear you. The bigger problem is with the Alti no go up. We don't want Alti to no go up. That was a disaster. Jay got that solved. I feel like the stock selection by ULTY has been better. Yes, Hims and Hers were dogging ULTY for a long time. I just thought they had losers. Yeah. And that's something you really can't backtest or quantify, is how good are the managers at moving the stocks in and out of Alti. All I can do is look at a portfolio and look at what the options are doing and figure out where the option's going to add alpha or subtract alpha. But it doesn't exist in a vacuum. Those guys are running, if they run better stocks through there, they do a better job picking stocks. I was really impressed with Jay, especially after the election. He had one Kamala company in there. It was a solar company, and it got killed the day after the election. But he had like 3 or 4 Trump companies in there. He had Trump Media for one thing. I believe they had Tesla. They nailed that. They were totally on the right side of the election. Let's look at that. Let's look at from after the election till the end of the year. But yeah, Jay really did a good job there. And that's what you're really paying for. The option, I'm just telling you about the options because that's what I know about. But that's that's a part of the return. But all right, let's do it to January 1. So we'll go from November 1 or November 6, or we'll just go from November 1, it's whatever, to Jan 1. All right, so, and we can see here how Alti went up. All right, and ULTY did go up, but WiMAX did a little better. WiMAX has a bunch of Trump stocks in there too, because they have a bunch of DeFi and crypto. But then let's do the because the market started falling. Let's go to the top of the market. Let's go December 12th. That's the day I put the model portfolio all in on Misty and AMD and stuff. It was right at the very top. Anyway, so let's measure from after the election. But Jay nailed the election. I mean, he was on the right side of it. I forgot we had a pullback after, and then it went up. But I mean, oh, wait a second. That's not what I'm trying to show. Okay, here's what I'm trying to show. I mean, Jay nailed the election. I mean, so what is that, a month? And he's up 9%, and you got $1.54 just in that 1 month for a dividend. Or I guess that comes out to 9%. But to make 10% total return in a month is great. WiMAX did a great job also. All right, guys, I'll let you go. If there's anything else coming in here, is Google selling off? What's Google doing? Okay, here's Brad. Thank you, Brad. Google EPS 217, reported 231, beat 6.45, revenue expected 93 bill. Nice. All right, guys. I appreciate each and every one of you, and I will talk to you in Discord. And listen to the X. If you guys have X, if you have any X, share it with me. Anyway, all right, guys. Have a good day.